Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, July 18th. Continued uncertainty about the global economy is pushing stocks down on Wall Street and around the world. Investors seem very skeptical about the results of the latest stress tests on European banks. Only 8 banks failed, 5 of them from Spain, and all of the continent's biggest banks got passing grades. But analysts point out that the test did not take into account a possible Greek debt default, which the markets see as a likely outcome. Following the tests, yields on the bonds of the PIGS nations, Portugal, Italy, Ireland, Greece, and Spain, are surging to their highest levels since the inception of the euro in 1999. The currency continues to decline against the dollar this morning. €1 now buys just over $1.40.
Another area of concern for the global markets is the ongoing debate over the U.S. debt ceiling. This morning, Moody's Investor Service suggested that the limit on government debt be eliminated entirely to reduce uncertainty among bondholders. Moody's warned last week that it would cut the United States AAA credit rating if the government misses debt payments, and Standard & Poor's followed suit. Those warnings are putting more pressure on the White House and Republicans to come up with a budget agreement. All this uncertainty has sent investors scrambling to find safety in the markets. They've been flooding into U.S. Treasuries, pushing the yield on the 10-year note below 2.9%. But perhaps the biggest beneficiaries have been precious metals. Gold surged above $1,600 an ounce for the first time ever this morning, and is now hovering right around that level. And silver prices are jumping as well, now trading above $40 an ounce.
On the corporate front, we've got earnings from a couple big names this morning, ahead of IBM's release this afternoon. Halliburton posted a 54% jump in second quarter net income on 35% higher revenue. The results topped estimates as the oilfield services giant saw stronger activity in North America. Shares of Halliburton are gaining about 1% on the news. Shares of Gannett are also higher in early trading. The publishing firm saw a 22% drop in profit as advertising and circulation revenue continued falling. But the decline was smaller than expected, and Gannett also said it will double its quarterly dividend to 8 cents a share. And turning to the financial sector, Charles Schwab reported a 16% increase in second quarter profit, helped by higher asset management and administration fees. However, revenue fell 12% from a year earlier, as many retail investors sat out these choppy market conditions.
We do have some negative news from the financial industry. According to Weiss Ratings, 4 banks shut their doors last week. Arizona's Prescott Bank, the First Peoples Bank in Port St. Lucie, Florida, One Georgia Bank in Atlanta, and High Trust Bank, also in Georgia. That brings the total number of failed banks and thrifts this year to 55. One big stock loser this morning is LinkedIn. The social networking site is dropping 3.5%, following a downgrade from JP Morgan. But the biggest decliner on the S&P 500 is News Corp. It's tumbling nearly 4% after falling to a 2-year low in Australian trading. The UK phone hacking scandal has claimed another victim, as the second-ranking London Metropolitan Police official quit today. The head of the firm's Dow Jones unit resigned on Friday, and over the weekend, Rebecca Brooks, the former head of News Corp's British newspaper publishing business, was arrested. The company's News of the World tabloid is accused of hacking into the voicemail of numerous targets, including the royal family. That's the latest from Weiss Research. Have a great trading day.